With us now, Brett Rose, CEO of United National Consumer Suppliers, an international wholesale distribution company. It provides products to Macy's, TJX, Amazon resellers, and more. Brett, what to make of this, really? I got a friend who's in the business of sort of home goods, supplying Bed Bath & Beyond and some others, and was talking about inventory piling up and having to question what to do with that, dealing with this spending slowdown and really this misjudgment that a lot of retailers had about what was going to sell through. So it feels to me like this isn't just a Target issue. What's your case?
John, thanks for having me back. First of all, you should totally connect me with your friend, and I'll go over with what to do with that inventory. You know, this is a bit of a whiplash supply chain that Target is dealing with. It's too much, too late, right? People stopped doing services, stopped doing traveling, and we're spending a ton of money on consumer goods. Big box retail became too reactionary, and they just started buying. So what happened virtually overnight as the world reopened, ports reopened, travel started again, is consumerism dried up, stimulism dried up, and really consumption of goods hit a cliff quicker and faster than we ever thought it would. And the retailers are feeling the effects and feeling the whiplash now. So
how much can we trust the second half guidance and expectations, though, if they couldn't see this coming? I mean, there's an expectation that the consumer is going to remain strong, but I don't know. I've just got a feeling that consumers are spending now because it's summer. They want to take that trip they've been putting off for a long time, but interest rates are higher. The cost of borrowing against your home equity is higher. I mean, how's that going to turn out? Do you think the retailers really know?
Yeah, well, you know, John, you could sort of use that argument for every season, right? Come August, September, consumerism is going to be back to school. Then we go into the fall, and then, of course, we go into the holiday season, which is, you know, Q4 is really the Holy Grail or Super Bowl. I think it's actually a really interesting opportunity for consumers and for certain retail segments like off-price. You've got warehouses and warehouses in California filled with canceled Target goods, canceled Walmart goods. Who is ripe for the picking for this is retailers like TJX, Ross, Five Below, and Dollar Tree. And the street is, you know, evident their stock prices are up. They are positioned as retailers to capitalize on that stock, pass the savings on to the consumer, in some cases just keeping the prices where they were, sort of pre-inflationary issues, which will keep the prices down at least through December. But I think come January, we're going to see a massive spike in consumer goods because we're in this challenge for at least a year.
Wow. Okay, that's important to note. Also, while that strikes me as an important playbook, at least in the short term, in the medium term, do investors need to be going back through earnings reports and earnings transcripts and figuring out who really got efficient over the last 2 years, who was really good about curbside pickup, about omnichannel retail? Isn't that what's going to really help certain retailers perform optimally and manage inventory based on the data and what consumers want?
Well, yes and no. Every retailer to some degree got very effective with omnichannel, or they're gone, right? Because they couldn't survive the pandemic. What we really need to look at is beyond the earnings report is what's their strategy for sourcing? Because right now you've got China lead times have gone from 8 to 12 weeks to 25 weeks. So what that has done is it's removed the ability for a retailer to properly predict. There's 80% accuracy when there's an 8-week lead time. There's a 40% accuracy when there's 25% lead time. So who the street really needs to look at is the guys like a Marmaxx and a Ross, the ones that have alternate supply channels that aren't ordering 3, 6, 9, 12 months out, because you have to be able to turn on a dime in this market. And that's what off-price can do, because their sourcing schedules are much smaller than, say, a traditional big box retailer who plans 6 months out.
All right. Great detail. Thank you. Brett Rose from United National Consumer Suppliers.